Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Tuesday. It is Tuesday, the 22nd of January. Welcome, everyone, to the Daily Market Commentary. I am your host, Chuck Fulkerson, and we're coming at you after a three-day weekend. We call it a three-day weekend. The Martin Luther King Jr. holiday had the markets closed yesterday. So I know lots of people still had to go back to work, but I know a lot of people did not. They got to celebrate an important man in American history, and we got a little bit of a respite in the market. So let's go ahead and talk about what's happening so far this morning. So the S&P, we are down about 17 points this morning, a little over 0.5%. The Nasdaq is down 56 points, almost a full percent. Not overly surprised that we're getting a bit of a pullback. For those of you that were in the live trading room on Sunday night, we had talked about my expectations of some sort of a pullback, which would give us an opportunity to get long if we pull back to a decent area. About getting short, we had talked on Sunday night about the potential to get short below this area here on a breakout. And not surprisingly, any trades that you took on Sunday night or Monday were higher risk because of the market being closed. And so not overly surprised that we sold off. However, we talked on Monday night about a breakout below. On Sunday night, we talked about a breakout below this area here. We were doing the trading room at about 8 o'clock on Sunday evening, and we had just started chopping kind of sideways. And so, no big surprise that we didn't do a whole lot after that. However, once we opened up last night, regular Globex started to trade. We kind of came down a bit more. Now, at around the European market open, we got a little bit of a rally. However, at this moment, we're starting to come down from that level. A nice reversal candle on the hourly chart in our last candlestick. Now, why did we start to bounce a little bit? Well, we ran into this little level of demand right here, and we got a little bit of a bounce off of this little demand level. Now, I didn't anticipate this being much of a demand level for us to worry about and for it to hold much. For a couple of reasons. One is this wick right here. See, this long wick right there indicates that price rallied up out of this little bit of basing and then came back down. The next candle's wick tells me that it came back down into here and then rallied up. So with this wick over wick here, right next to this little basing, that is important. This tells me there's a story in candlesticks. And when you start to look at the story that's inside the candlesticks, this tells me a whole bunch of stuff. What this tells me is that this was a level. The move away was this area up, because at one time this was a big green candle. This next, the wick down, and then the next candle opening here, trading down and then going back up, tells me that it's a retest of this level. So this level, while it was originally a promising level, did work out. It worked out very well because we came back down, and on the retest, we popped up out of it. Now, we traded back into this level, and we traded more than halfway into the zone, thus making it a useless level the next time through. And so I zoom in on that as an explanation of really why I'm not buying down here as of yet. As a matter of fact, I think that level will kind of come right through. And then the next area would be down here. We've got a little 15-minute confirmation style entry as a potential to go long. Now, my big picture is telling me right now that I'm better off being a buyer. And we're just getting a little normal, decent pullback in our 4-hour time period. For those of you that are trend channel watchers, if you do watch a trend channel, we're kind of coming back to the bottom of this trend channel. I think it will come a little bit below there, and then there's a decent amount of demand down here where we could see a little bit of a reversal, and I don't have any quality supply until way up in this range. So Ultimately, I think that the better opportunity is to be a buyer when we get down to it. However, there's a reason, certainly to be a seller this morning. Now, for those of you that use the candle-to-candle style of trading, this is a great setup for a candle-to-candle style of trade. So if you got short on this, your stop would be above this level here. This is a candle-to-candle setup at this moment. So the next print would lower your stop down to below this candle's low. Next, the NQ. So in our NQ levels, we are getting very similar price action. This would be kind of the next stopping point in the NQ. Would be possibly this area here. Now, the NQ is a bit weaker than the S&P this morning, down almost a full percentage point. So this has more room to fall down into this area down here. And so if you're interested in a place to get long, it would be probably below here. I would actually look all the way down to here. When I find this on the 4-hour, we can see once again, if we look at this, we can see that our trend channel does indeed still exist. And this one's closer to the bottom of that trend channel, but definitely a little bit of a slowing momentum approach in there. Right? For those of you that use, what is that, linear regression? And I don't normally, look at this, but if you think of this as your fair price value area over this central pivoting trend, then that tells me that there's still a little bit of room here for this to fall off of this center price area. This regression channel would be kind of the standard deviation around it. Now, I drew it here just to make it a little bit obvious, but you can use something like a Bollinger Band, whatever it happens to be. But we have gotten a nice little bit of a pullback to an area where we could see a bit of demand. It's just not quite there yet. It'd be a bit lower. I like the S&P demand a bit more than I like the Nasdaq demand. So both of which, though, give you a candle-to-candle short opportunity until we get to those quality demand areas. In crude oil. So in crude oil, I had talked about a potential for those, while we were in our trading room on Sunday night, to get long above this little breakout area, but knowing that there's always more risk when you are doing these. When you're doing these trades, simply because it's the Globex session. We did come back, pull back, got back up above. So not a whole lot of market activity in there. However, we have put in what I think is a fair amount of weakness. And so now when I look at this, I'm going to come to this area here where I've got this wick over wick level and use that wick over wick level as a bit of a potential reversal trade. We've just come back up into it and retested it a moment ago, which makes it a bit weaker if you missed it once already. If I look at this on a 15-minute chart, you'll be able to see more clearly why we've taken this whole area. It's because of that region in there. We've just come back in and retested it, and this one is beginning its move down off of this 53.47 area. The thing I had talked about a while ago was I anticipate that you've got a profit target all the way down here to around 52.85, right? Around 52.85, I think is a legit place where price can continue to fall. We're down almost 1.5% in oil this morning. Looking at gold, we have a little bit of it's not a perfect double bottom here, because a double bottom would actually be a slightly lower second bottom, but put in a little bit of a bottoming pattern here, and now has started to move back up. Now we've come back up to what could be a supply area. However, this area of supply, we've hit it once, moved away. We're sitting there on top of it a second time. I think there's potential for price to rally up into this region here. Now, what would be a confirmation that price can rally up? Well, that would be that the markets continue to move down, right? And we're starting to see that in the overnight sessions as we speak. So we'll just keep a close eye on the correlation of what gold and the equity markets wind up doing for this morning. Mind you, it's still pretty early in the morning, right? I'm recording this at 4:30 4:30 in the morning on Tuesday, so there's plenty of time before the markets do open. We're about 3 hours before market open. And so plenty of things that can happen between now and then, although this is typically the time of morning where you start to see trends have developed and started to really, gain some momentum. Bonds are coming down a little bit this morning, a little bit of a rally in bonds in the overnight sessions, but now actually starting to show a bit of weakness. And they have been pretty much inverse the market for the last few weeks. So you would anticipate them finding a bit of strength if the markets are going to continue to show a bit of weakness. We don't really have any quality demand in bonds until way down here. We had a nice short last week. Leave me a comment in the comment section below. Let me know if you caught the short that we talked about in bonds last week, and the short that we talked about was off of this little level in here. Kind of running that down, getting short right there actually, and running it down before the market closed on Friday. We've come back up to back above that area. Now, there is a precedent to use this level up here as a potential for a short. And what would more confirm that short working out would be if the S&P or if the S&P or Nasdaq are in demand at the same time this comes into that area of supply. Next, let's go ahead and take a look at the Aussie. So the Aussie, we had a breakout short below this area. So below this 71.54 area. So if you got short on the Aussie, it is continuing its move. So let me know in the comment section below if you took this short. This was a trade actually we had talked about on the Friday session, and we're getting a nice move down out of that level. If you missed the short, you may get another opportunity right up in here if we come back here and retest it. So that one does indeed continue its move down. If you did catch that Aussie short, then your target is somewhere down in here, as we typically see these speed candles become magnets for price to erase that movement. So look for that Aussie to continue its move down. In the Euro, we had a couple of opportunities above us for shorts if price came back to there. We did not get back to there, as the European markets kind of continued normal movements yesterday, even though we were closed here in the U.S. I know it's hard to believe the rest of the world still keeps operating. That makes no sense to me. No, I'm just kidding. The European markets have, we do have a pretty nice strong trend to the downside. This one, has come off of our short level. This level was one that we had identified a while ago. For anybody that took it now, I mean, if you're more of a swing trader, you've gotten a lot of nice play out of this level. I think there's still room for price to continue to fall. We've got there's always an opportunity to get back to a gap fill area. Now this gap's already been filled and closed and all that fun stuff, but still can serve as a magnet for price, as there still is an opportunity all the way down here. So if you missed getting short up there and you still think you want to get short, well, certainly we've got some retest levels up here. We are putting in a little bit of a reversal pattern now, as we've gotten a few hours in a row here of strength, but now we're getting some weakness by these wicks. Anytime you see those wicks, that tells me that there's a bit of indecision. And so I might be looking for a breakdown below maybe some of these candles lows if you are a candle to candle style. Canadian dollar, I had said essentially was a snooze fest for quite a while, although now we're starting to get a little bit of a movement. Looking at the Canadian dollar, we've gotten a little bit of a rally up off the European market open. I wouldn't normally select this because the time of the day is not ideal. But I really like this price pattern. And so with the time of the day being fairly weak, just understand that your probability is a bit lower. But I really like this price pattern for a potential reversal if we can climb back up to that range. Now, time of the day, like I said, is terrible, right? But I love this price pattern if we can make it back to that area. Last, and certainly not least, would be our Great British Pound and the Japanese Yen. So in the British Pound, we had taken a look at this little kind of pinching that we were seeing on the Sunday night, knowing that we may get some sort of a breakout from there. And we got a little bit of a breakout to the upside on that pinch. and it did come into our supply, and we got a nice trade off of the supply level, moving all the way down. However, if you're following, depending on how you place your stops, there's a chance that you've gotten stopped out on this one right away as it then moved down, and then it came to its fair price value area, and then boom, it's popped right back up. So depending on how tight you kept your stops, realistically, your stop would have to be, above the highest wick in this base, which would be, let me zoom in on that. Guess I should zoom in on the whole thing, which would be above this area here, right? So above the highest wick of that base. So, it only went above it by about a tick or so. And so, but it did come down to its fair price value area, and now boom, has popped back up. Now this is on overnight movement. We saw right at the London Open, the euro gave us a big old pop, and so I think there's a chance we'll get a bit of a retracement to get you another chance to get back into this thing, if you indeed want to take it long. The British pound has been very news driven, right? There's a lot of Brexit announcements that are always continuing to come out. My 4-hour is telling me to be more of a buyer than a seller, but it's not a definitive more of a buyer than a seller. And so just be a little bit cautious there when you're looking at it. We are coming to a wick over wick area of supply in the 4-hour. And I don't normally use the 4-hour to determine my supply and demand areas. I normally use the 4-hour to determine am I a buyer, am I a seller, but it is a bit inconclusive at the moment. Japanese yen. So our Japanese yen has really been more of a breakout trading currency for the last, I'll call it, few weeks. And so we're kind of getting a much of that same price action. I will say that I would have looked at this triangle pattern as a potential breakout to the downside originally. However, now we've put in a higher swing high and a higher swing low, and so there's reason to believe, with reasonable expectations, that we can rally from this area. And if we do, your next reversal trade is up in here. This would be our next area for a potential reversal in the Japanese yen. All right, so I know we covered a lot. We covered a lot of ground in this last piece. So if you've got any questions, please send me an email, support@tradersarmy.com, and I will see you all soon. Just make sure that you keep your stops tight, and if you've got any questions, please just let me know. I will see you soon. Later.